Market Michael here. It's May 24th. I should know that. I've been looking at the date all day today. So, there's so much to cover, guys. I don't even know where to begin. Let's go ahead and begin with the economic outlook and situation that's been going on. And let's start off with the Fed FOMC minutes. Now, the language is dovish and they are vague, very vague. They don't define a lot of what they say. And now this is kind of on purpose to give them room to wiggle. For instance, they say they expect inflation modestly above 2%. Now, what is modestly? We really don't know. All we know is that it's above 2%. And as in addition that the Fed is admitting it's above 2%. We know it's much higher, and what they use to calculate the inflation is much different than what it used to be. So, what else? There are also some Fed members in the FOMC minutes are talking about removing the rate hikes soon. So, we could possibly see the rate hikes end this year at about 2.5% or so. Now, why do they have to stop raising rates? Well, that's because there's so much debt in this over-leveraged cycle. We're so over-leveraged, everything is so built up again that it's time to cut back. In addition, this is not a sustainable situation. You can't just pump, 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 and then not pump. I hate to use this because I hate Keynesian theory, but the Fed is just pumping stimulus with the gas pedal, and when they take it away, it causes bad things to happen in the economy, and more stimulus is given. A lot more than the previous time. So just like how more stimulus needs to be given than the previous time, rates can't go as high as the previous time. These are functions of Keynesian theory. So, how many more times can the Fed do this? I don't know. Peter Schiff, many other people, are calling for a big crisis ahead of us. I don't think it's this time. I think things have to get a lot worse. Things have to really get a lot worse. I think the government is going to unleash the Keynesian theory and take the pedal and mash it through the floorboard and go all out into a infinite QE expanding supply. So, this is a problem though. And when you cut the rates down to zero, and then they go up higher, it's going to make businesses cut back, and it's going to make people cut back as well because they have to pay off their debts. Pretty obvious, right? So, housing is being affected, and a lot of this has to do with construction costs. Now, Toll Brothers missed earnings because of these high costs, so home sales are slightly down, and high value homes are not too bad, but the new home sales are down much more. Wages up, price, everything is going up in value, right? So that's the inflation for you. And this is making it harder for the companies to turn a profit. So just like Ford, it's hard for them to turn a profit on all those vehicles, and fucking what are you gonna do? They have to cut back. So again, this brings us to the next topic, is the auto bubble. So we got the housing bubble, the auto bubble, and sales are down big time. We'll get into this, but I'll just say here that the durable goods number that we got is pretty bad, and that we got a very, very bad auto sales number in there. The prior was 2.7% gain. We're at a 1.7% loss and a 0.9% gain excluding transportation. Again, guys, just like mortgage, just like the new home sales going down, It's it's following the lines of the economic outlook that's going on and continuing to go on. Now, I think that's good for now. Don't you guys agree? I say that was some pretty good data. That wasn't even data. That was just me chatting with you lovely folks. So we're going to pull up the data for this week. Now, again, Monday, Tuesday, no releases. So again, look at that. We got mortgage index at a slight increase, 0.1%, and new home sales down, down actually down 10k, down 10k, and big oversupply in them crude invents. The FOC minutes, we talked about that. Initial claims going up, guys, going up. This is what happens during or right before a recession. We see initial claims starting to rise. Continuing claims are increasing as well. That are not good sounds. Housing price index is starting to slow at 0.1%. Existing home sales again 5.4 million over 5.6 million. We were expecting 5.57, but we got a bigger drop than expected. Again, nat gas invents were slightly lower. And again, those durable good orders that I mentioned, big miss, guys. Big miss. Again, although the rest of the durable goods are slightly rising, but again, Michigan sentiment at a zero point 0.8 decrease. We've been floating around 98 for a long time. I think this is the turning point where things start to get bad because the Fed is continuing to be more dovish. Now, I want us to compare charts. So forget me, you don't want to look at my ugly face. I get it. Let's look at all monthlies, guys. Okay, you can kind of see the similarities between every one of them. Why don't I have volume on these two? Oh, God. It's always something, right, guys? Whatever. Ignore that there's no volume on these two. I have no patience for this shit anymore. Okay. So, 01, 08 right here. See, 08 was a walk in the park. Look at the amount we've doubled since 08. We are headed for a mega disaster. Although this is a bullish candle, you know, I think the economic data and things are just going to start churning down lower and lower and lower. Overall, look at here. I hate when I ruin the charts. Whoa, guys, look at this. Parabolic SAR balls on top. Look at that Nasdaq. The parabolic SAR balls never left. You could barely see them. I know it's tiny, guys. Look at there. Parabolic SAR ball. Look at them. All on the bottom. Look at that big green. Meanwhile, Dow and S&P are struggling and have parabolic SAR balls on top. Those are negative indications, as well as the fact that they're lagging behind the comp, which is where all of the pump stocks are, aka FANG. So, let's go ahead and put up a weekly. We're going to compare it. We're going to compare these charts continuously. So what I'm seeing with a weekly chart, guys, is an interesting story. Look at how normally when the MACD does this and the histo does this, it wants to break out and go bullish. But we're already at the top, and again, this is a transition candle. We cannot confirm that we want to go up after this week. And same thing. It's like and but look here. Again, look at the Dow and look at the S&P. Okay, I'm sorry guys. Dow Jones, S&P, comp. You could read it at the top. check it out. Negative dojis. Here we have a fat transition candle and a doji. Here we get pretty fat negative candle and a decent long-legged spinning top. Again, I think this is all uncertainty, but this CCI is pretty spiked out, and it listen, the markets want to go higher. The elites want to push the stocks higher. They're also doing a massive bond buying operation. Let's look at daily charts and then let's get into the other indices. Other regions of the market. Again, look at here. On this daily chart, this looks awful. This MACD looks like it's going to cross and we're going to enter a negative phase. Although we're at 2 transitions in a row, we really didn't want to pass this moving average, but it looks like we're gonna. Same thing with the S&P 500. Not even going to go over it. Now, again, whoa, that candle just does not... Ah, fucking cunts. I always ruin it, huh? Oh, you could see that, guys. That's actually pretty good. So, again, you see that was the top, a nice morning star. Again, nice. This is a morning star as well, but this was negative, and that's the difference. So, I'm really curious to see, because we have negative candles on both sides. Meanwhile, NASDAQ looks positive. Very interesting. 30-minute chart. Listen, we could, I don't know. Look at how it just held support at the end of the day. I think they did that on purpose because, again, it is a 3-day weekend. Let's get into it, guys. Let's pull up the 10-year, the dollar, and our good old friend gold. Okay, well, as I have said, I did not think we were going to end up piercing $94. We are having a divergence, big time. I did not expect this. We still could fail it. We're at the end of the road. We could go for another run here, even higher. We could go to almost $100, but I would say we have to wait and see and let the situation develop. If you're going to make any trades, people don't want to buy gold, guys, if they could buy the dollar. Having a high dollar is going to make it very difficult. Now, again, guys, we shouldn't break. We're at the top here, guys. We're at the top. There's no way we could physically go higher right now. We'd have to pull back, like have this nice pullback, right, and then we moved higher. Have a nice pullback. Well, that's perfect head and shoulders. But let's look at a longer term chart. Let's look at a weekly chart. Again, we see this doji. Let's look at a monthly. Again, well, this monthly definitely shows this. You could probably gamble that the dollar's going to go up and gold's going to go down. You could almost gamble that. Let's look at a 20-year monthly. Again, wow. Wow. See how this was bullish? See how this was bullish? Well, this was bearish, but we've had an extreme decline at that point, and that's when we started this new trend line. So, guys, this could be seriously dangerous for the dollar. For gold, excuse me. Now, the 10-year, on the other hand, has just gotten the parabolic star ball on top. We could expect a tiny bit more downside. We should have support around this area and just not be strong. I say 29 is going to be this area of resistance. Let's look at a longer term chart. That is totally an indication that we're in for a decreasing bond yield, which is going to be bullish for stocks. So if you want, go ahead, play your stocks, but just know shit's getting real and the economy isn't doing well right now, and it's not gonna fare any better in the future. We got this, we got this. Let's pull up gold and then Bitcoin and then sweet crude, and then I'm getting the fuck out of here. Well, silver looks good. Silver looks like we're going to get some support here at 16, which I absolutely thought we would. And Bitcoin, which has been declining rapidly, which is not looking good at all. This is a monthly chart. Let's look at a weekly. Again, we are decreasing. I thought it was possible we could possibly get support at 8,000 something or other, but it ended up that we just fail it. I knew we were going to fail this. I didn't think we were getting above that 10,000 really. And if we make a higher low, we can expect some major gains in that Bitcoin, friends. And also look out for those other cryptos. Now, let's wrap it up here, guys. You know, I know you love me. I love you too. But, you know, I'm not the the best trader in the world. So, at times it's hard to be a trader, and you know I need this job to stay on my feet here, and you know I'm making good money, and that's all that really matters. So if that's what I have to do to survive, guys, then so be it. But I'm gonna try and get you this data weekly. I'm gonna try and analyze stuff for myself. If I see some good plays, I'll let you know. Perhaps that'll be a topic for another video. But overall, I think the economy is sideways right now, going flat and negative. You know, by the time the GDP reflects negative growth, it's already too late and you're already fucked and everything's already in a shit show. So get prepared now while you still have time before it's too late. Janet Yellen said we would never have a recession again. I doubt that. That is a fucking lie. She has no idea what she's talking about. She doesn't know one thing about economics, I'll tell you that much. And she doesn't know one damn thing about Austrian economics. So, with all that being said, thank you very much. Please like and subscribe. And have a great weekend.